The views and opinions expressed in this broadcast do not necessarily reflect or represent the views and opinions of WBGR Network. Any questions or concerns about what is said should be directed to the show host, whose information will be provided upon request.
Hello, welcome back to Let's Talk Money 2020. Today is I think it's the 5th of, is it 5th? Oh, yeah, I think it's the 5th of November. A lot going on in the world. Of course, there's elections and so forth going on. So let's get right to it. I chose a topic today because I have several ministers, pastors, church members, religious organization, all kinds of religious organizations, and we basically always come to a couple talking points that are really, I guess, are germane just to the ministry. So there's always, how do we tax a minister from the IRS standpoint? Are they doing it right? What are the benefits of the members? And who gets taxed, what gets taxed. There's a lot of questions surrounding the whole ministry piece when it comes to the IRS. So I wanted to do a show just to kind of clarify, how are minister salaries taxed, how is the housing allowance taxed, other perks that ministers actually get. Because we like I said before, we have so many different clients that are either ministers or pastors or they're either an imam at a mosque. They're quite a few religious people that come to us. So without further ado, let me go right to it. So as I said before, the IRS has these complicated rules. It can be complicated when it comes to ministers, and there are a lot of misunderstanding about should a minister be taxed or should they not be taxed. Basically, if you are a minister and you don't want to be taxed at all, then you're going to have to fill out special forms from the IRS exempting you from the self-employment tax. But once you do that, you can't revoke it. So I'm not going to talk about those particular people because, to be honest with you, I don't run into them too often. And if you do decide to go that route, then you have to consider that you're not really paying into the Social Security Administration. So there's a whole lot of issues that go along with that may affect you later on in life. So we don't really see those too much. Again, I'm not going to really touch on those things. I just want to throw it out there that outside of that, there's a rule. There are rules that really govern really whether ministers are taxed or not. And believe it or not, a lot of churches try to get by where the ministers are not taxed. And they get a regular paycheck, and that's really not the right approach. So hopefully, I can lay out a clear approach that's understandable. And if you have any more questions, just give us a call. Our number is 301-474-1040. Or you can contact us by email, troy_emery@tdecpa.com. So let me get right into it. So I want to get into a couple of definitions first, and the first definition is what the IRS considers a minister. So a minister is either a licensed person, commissioned, or ordained. There might be some other smaller categories, but these are the basic three categories of what the IRS considers a minister. And you'd be surprised, it's not necessarily that you have to be commissioned by some state or local government to be called a minister. So let me give you some more definitions here. So the difference between, and I had to do this research myself because, to be honest with you, I didn't know right off the top of my head, so I did some research on this. The difference between a licensed and an ordained minister is just a slight difference with the IRS, but they do make a distinction. But at the end of the day, both of them are considered ministers. But let me give you the definition what a licensed minister is and what a ordained minister is. All right, so a licensed minister is usually it's administered by the organization. So the church or the larger organization that the church is involved with gives out these licenses. So a licensed minister is not necessarily one that is over the whole church. You may have a church that has several ministers in it, and the organization just wants to make these people ministers so that they're really in charge of certain functions of the church. And you don't necessarily have to have a degree in the ministry. And like I said before, you can have multiple members of that church to be considered ministers if they are licensed ministers. All right, so and the last thing is they usually have less authority over the church. Okay, so like I said before, a deacon or some other category can actually identify with being a licensed minister. Again, at the end of the day, when it comes to the IRS, they both fall under the same rules, generally speaking. So I just want to lay out those differences because in most cases people think that only the head person of the church can qualify as being a minister. And according to IRS rules, that's not the case. You can have other people besides the head pastor that can become a minister of the church. So, you have to make sure that you go through some process within the organization that you identify who are the ministers if you're going to license ministers. So it's just a matter of putting it in your bylaws and really making it part of standard procedure as far as who gets a license within your organization. And again, I'm going to say it one more time. The issue of whether you are a licensed minister is not a application that you fill out at the state or local level and then you wait to be approved to be a minister. No, that's not that's not the standard for the IRS. The standard for the IRS is really or you ordain or are you licensed? And again, that license can be something that the church comes up with, the organization comes up with, and we're saying that, look, this is how we define licensed ministers. So, but outside of tax rules, there might be another rule when it comes to what is a licensed versus an ordained minister. Keep it in mind, I'm giving you what the IRS defines as what is a licensed or ordained minister. Okay, so ordained ministers are usually permanent in nature, so they're usually the head person at the top, whether it's a male, female, or whatever. And I'm making that distinction because some denominations don't necessarily recognize women as being a minister. That's pretty sad because I think women and men can be ministers or head of churches or mosques or synagogues or whatever. But they have broader authority over the religious affairs of the church that ordained minister is. So you can have an ordained minister and you can have licensed ministers underneath them according to the IRS rules. All right, so I hope I really made that clear. If not, you can just give us a buzz and we can talk about it a little bit more. So, as I said before, both are recognized as ministers under the IRS rules. So, let's get into the IRS rules. So, you're going to fall into two categories if you're a minister of the church or a religious organization. You can be an employee, and an employee really, the organization really dictates how you actually do your job, right? So that really is the litmus test of whether you really are an employee or independent contractor of the church. So if you are, for example, you are under some bylaws, you have to conduct church in a certain manner and so forth, you look more like an employee. Independent contractor, and by the way, these rules are no different than working any other job. If there's somebody can exert control over you, then you are a W-2 employee. Independent contractor, of course, that's less control, and it usually requires a 1099. So I've seen both ways. I've seen where ministers actually get a 1099, and I've seen situations where ministers get a W-2. I have not read that where the IRS is really going to be strict as far as whether a minister wants to call himself an employee or a independent contractor, because to be honest with you, the IRS kind of takes a step back when it comes to really enforcing strict laws when it comes to a church. They don't want to be seen as being prohibitive or really on a religious organization. So unless there's an abusive situation that's going on. So the IRS kind of takes a step back and really gives churches a little bit more leeway than they would actually give a regular business when it comes to who is actually an employee and who is a independent contractor. So let's move on here. The other money that you earn if you're an employee, say if you're an employee of the church, monies that you can earn for marriages, baptisms, and other services are considered self-employment income. So you could have a situation where you have the minister getting a W-2 and the minister getting a 1099 for marriages, baptisms, and other types of individual services. So it might not be too clear whether a minister should get all a W-2 or a 1099. I would encourage that the wages, the normal wages you get as a W-2, if you're currently doing that, but if you conduct speaking engagements, you do baptisms, you do all kinds of things that are outside of the church, keep that money as a 1099. The reason is you get more deductions against that income, that part of the income, to actually save you on tax dollars. So if you are an independent contractor and you're doing these types of services, you're usually going to put this on a Schedule C, and you're going to add some expenses along with the income. So whether you're an employee or whether you're an independent contractor, both are subject to income taxes. So this is one of the things that's not clearly understood when it comes to my ministers and imams and whatnot. You do pay income tax on the money in which you receive, and both are really subject to the self-employment tax or the Social Security tax. Whether you're an employee, if you're an employee, you're subject to the Social Security tax. You are a independent contractor, you're subject to the self-employment taxes. So one caveat is that a minister or anybody that works for the church doesn't pay for unemployment taxes. Now, you can elect to actually pay unemployment taxes if you want to, but there is no guideline that a religious organization or an employee of a religious organization has to pay unemployment taxes. And this is true at the federal level, and it's true at the state level as well. But be careful about this, because if you have a religious organization, just suppose you have a church and you have a school, and you put the school under a whole separate tax ID. Well, under that circumstance, then you bring in state unemployment laws into effect, because the school will have to pay unemployment taxes, where the church would not be paying for unemployment taxes. So really think this out. You know, if you got schools, if you got daycares, if you got all kinds of other services underneath the church, if you get a separate tax ID for those particular entities, then you're going to be subject to the unemployment taxes. So on those entities, not on the church. So I just want to make that clear. All right, so let's look at an example here. So Pastor A gets a W-2 salary for $55,000, and Pastor B gets a 1099 for $60,000. And there's no housing allowance on both. Which pays income tax and which pays Social Security or self-employment taxes? So your answer is going to be both of them is subject to income tax, and both of them are subject to either self-employment tax or Social Security tax. So little trick question there. All right, so withholding. So as a pastor, you if you get a W-2, in a normal environment, if you're in a W-2, you're going to have withholding. But the difference between a religious organization is that there is no requirement that the IRS makes the organization withhold income taxes or self-employment taxes or Social Security taxes from a minister. Now, a regular employee, just suppose you have a clerk, someone answering the phone, someone's doing the accounting or whatever it is, someone's cleaning up the church or whatever your other employees are concerned, they are subject to withholding taxes, just like any other organization. All right, so the difference between a minister, ordained or licensed or whatever, this is where you start playing with these words, is there is no requirement to actually from the organization to actually withhold these taxes on the ministers, whether they're ordained, whether they're licensed. So there's a difference there. Now, let me just say something right before I get a lot of people in trouble here. If you are a minister and you're racking up a pretty substantial salary, then on your tax return, your individual tax return, you're responsible for paying the self-employment tax, the income tax, and so forth. So if you're a minister who gets no withholding and you go year after year just owing the IRS money the IRS money, then what's going to happen is they're going to force you to actually do the withholding. So there is no requirement off the bat for a religious organization to withhold money on its pastors. However, if you violate that year after year after year, the IRS is going to start requiring you to actually start doing some withholding on the minister itself. Now, they don't say this. It's no way you're going to sit down and read this, but this is what happens in practice. So, be careful, my fellow ministers, that if you are not paying your taxes every year, but you're getting money from the church every year, the IRS could come in and say, no, you're supposed to withhold money. Okay. Another reason why you don't want to go down the path of saying, hey, look, I'm a minister, I don't have salaries, I'm not subject to withholding, is because at some point you might go to try to apply to buy a house or something. If that's the case, then you're going to have trouble because you won't have the tax returns to really support buying that house. So, you got to really think carefully about these things. All right, so let's move on. So, the housing allowance. All right, first thing is, the pastor of the church, we see this all the time. They might have the church designate a housing allowance for the actual pastor. So it's either the fair market value of the home or it's compensation for the rental of the house. So you take what a fair rental price is for that particular house that the church has designated. Or if the church provides the pastor with money to actually pay his own mortgage and utilities and so forth, that is considered a housing allowance. So listen to the words there. It's the house. It's what they pay for mortgage or rent, utilities, whatever it takes to actually maintain that house is considered a housing allowance. Monies for the pastor to go and I guess go to the movies or his clothing or his personal expenses are not considered housing allowance. That really is considered payroll to the pastor. So you have to be careful about that. And the last thing is it cannot exceed what a reasonable salary is. So if your church size, the IRS will look at your church size if you're audited, and they would say, okay, is this housing allowance reasonable to other people with the same size parishioners? So be careful there not to really exceed the what is reasonable when it comes to a housing allowance. And the good thing is the housing allowance is not subject to income taxes. So it gives you some leeway to really structure, okay, am I going to give the pastor a higher salary and he has to pay income taxes on that salary, or do I give him a lower salary and then him not being subject to the for the income taxes, but he'll be subject to the self-employment tax. So what we do is we sit down and we say, okay, what is it? Is it better to actually have more in housing allowance or less in housing allowance and more in income? More in income. So these are some of the analysis work that we do at the office. So just want to make that clear. So the housing allowance, again, it's not subject to income tax. However, it is subject to self-employment tax or the Social Security tax. So you have to pick when you do the pastor does his individual income taxes. There's an option. There should be an option there that says, okay, I'm paying income tax on my money, and I'm checking a box whether I'm paying self-employment tax or Social Security taxes on it as well. Again, the rule is for housing allowance, no income tax, right? But you have to pay the self-employment tax. And this is the area that most people are kind of confused on. So pay close attention to what I'm saying here on this particular topic. Okay, so example number 2. All right, you have Pastor A who received wages of $100,000 and housing allowance of $24,000. Would Pastor A pay less tax if W-2 wages were $90,000, which is smaller, and a higher amount of a housing allowance? So we're getting into the play. You know, we're going to give him more housing allowance, or we're going to give him, or we're going to give him more of income. So, you know, you're going to play with the numbers, and you're going to see which way it comes out better for the pastor and the church. Okay. For the church, for the most part, it's not going to make much of a difference, but it does make a difference when it comes to the pastor, when it comes to actually doing his income taxes. So, yes. So if you were to reduce the actual amount of salary that the pastor has and make up for it for housing allowance, it's going to save him that self-employment. It's going to save him that income tax, right? Because you have less amount of money that he's going to be taxed on for income tax purposes, but he's going to have to pay the self-employment tax. He would have to pay it anyway if you made it the salary. So, again, you can play with those numbers and then make sure your numbers come out right. So, these are the tax issues with housing allowances. No withholding taxes are being taken, so be very careful that when you issue out to the pastor, okay, I'm making you're giving him a certain amount of housing allowance. Just keep in mind, in most cases, you're not withholding taxes on that withholding tax on that housing allowance. So what'll happen is at the end of the year, when he actually does his tax return, his self-employment taxes are going to increase because you're going to pay the self-employment taxes on the withholding allowance. So I've seen cases where the pastor finds himself into tax problems because they start ballooning the housing allowance, $30,000-$40,000 a year, where he has to pay the self-employment tax at the end of the year. So that the main issue is you're not really considering the self-employment tax on the housing allowance. So with that, I know I talked about a lot. I'm going to take a break right now, and I'll get into what is considered income from a church standpoint. So hang in there with me. I'm going to get into income and some other cool things when it comes to the church. And by the way, I won't be able to finish this topic. So just let's take a break right now, and then I'll come right back.
State and local government exercise very important functions in the United States. They are responsible for creating state legislation, which can become state law. They plan and pay for roads, run public schools, parks and libraries, provide water and utilities, and organize law enforcement, elections, and much more. As citizens, local government is more easily obtainable and are the means in which we communicate to the federal government. This is why it is important that we vote in more than just primary presidential elections. Midterm and local elections are just as, if not more, important for our communities and its efficiency. Resistance is local. Criminal justice reform is local. Gentrification is local. And the right to vote is a privilege that once was not granted to all citizens because of their gender, race, or ethnicity. So today, we are all afforded this right, and we should vote at every given opportunity, simply because we can. For more information on voting in poll areas, please visit the link below.
Okay. All right. I think we're back. Next thing we're going to talk about is what is income. So, you got your normal salary, but income is really, from the IRS's standpoint, is the pastor's food, clothing, vacations, and other personal expenses that you might be taking out of the church books. That is considered income as well. So, really, you're really supposed to actually include that on the pastor's income taxes. So all personal items should be included on the pastor's salary. So we see this a lot, especially smaller churches. The pastor actually runs through his personal expenses through the church. Well, the real right way to do this is to really consider these type of expenses income to the pastor. You don't want to get the pastor in trouble later on. And plus, for, fiscal policy for the church, you want to make sure that you actually have a salary set aside for the pastor, and you kind of stick to that salary without taking out additional expenses, personal expenses for the church. It's not a good look to the members of the church when the pastor is actually taking out the personal expenses. You might get away with it for a while as you're small, but if you're trying to grow, you want to make sure that the pastor has a set salary, so people don't really question where the money is going to. So you have to be very, very careful in those situations. All right, so again, just to add on to what I'm saying, excessive personal expenses could be a signal of mismanagement of the funds of the church. So I'm just saying, I'm not throwing stones. I'm just saying, be very, very careful of this because it's not a good look, and it does have an effect on your congregation. All right. Well, so banks, again, if you're trying to get loans for the church, you may want a bigger church or something. When the banks see personal expenses coming out of the books, you're going to really hurt your chances of actually getting that church loan to actually get that bigger church or move or whatever you're trying to do with the banks. So because the banks are going to see this as a sign of pending financial trouble. So just give me some areas to think about. We see it all the time. Again, I'm not throwing stones. I want our churches to actually be more fiscally sound. Because they play an important role in our communities, church, mosques, synagogues, or whatever synagogues. They make a tremendous difference in the lives of everyone. So we want to make sure that we cover these things, and we make sure that we understand the taxation of the ministry. All right, so here's an interesting topic: gifts. Now, gifts actually work a little bit differently. So the way it works is, if you have members of the church that want to give you a personal gift, this is a loophole, a pretty good loophole at that. Those particular individuals give their money or give money or gifts to whatever to the minister or I would say the licensed or ordained ministers or someone head of the church or mosque or synagogue. That is not considered a taxable event, believe it or not. Now, it can't be planned by the organization. That's the one thing that the IRS requires, that this wasn't a board approved gift, right? If it's a board approved gift, it starts to look more like compensation or payroll. So be careful, but think about it carefully. Individual donations that go to the pastor are not taxed. You should really consider these things that I'm saying. I'm trying to be careful in the language that I'm using, that I'm not just trying to ask people to commit fraud, but I'm telling you what the rule is. If an individual wants to give a gift, that is not an individual, that is not a taxable event. So you can somehow, encourage gifts in lieu of income when it's appropriate. All right, so let's get into some of the member benefits before we wrap this up. I know we covered a lot of ground, and next week I'll get a little bit more deeper into these things, because I can't really get into all the church ministry rules when it comes to taxation in one sitting. It's too much for me, as a matter of fact. But so of course you got everybody knows about charitable contributions, although the new tax laws really kind of put a limit on who can actually donate, because one thing you're going to have to itemize now in order to actually do the charitable contribution. So far less people are itemizing because of the larger standard deduction that kind of precludes you from itemizing. But if you still can itemize, then that's a great benefit for the church. And a couple of things. You can give money, you can give goods, you can actually give mileage. You should be, as a member of a religious organization, you should always track your mileage and what you actually do for the church. So if you are running errands for the church, if you're picking up people, dropping off people, you should keep track of the mileage. I'll get into the mileage in a few minutes. But you'd be surprised, a lot of people miss this. They have large church donations, but they forget about the mileage. If you have to travel somewhere on the church's behalf, then you should really track that mileage. Now here's another thing. Qualified charitable distribution. So this is one that I'm going to talk more in detail with next week. So if you have older people who are over 70 and they have IRA accounts, they can actually take out money from the IRA accounts and give it directly to a nonprofit organization. A church is a nonprofit organization. You can give it to a nonprofit organization, and there's no tax on the person that's actually withdrawing the money. So this is a huge deal, and it really is for people that are over 70 and got IRA accounts. So, but you'd be surprised. This is a huge deal here. I'll get more into this next week. And of course, there's the non-cash contributions, clothing, property, and that sort of thing. So, charitable contributions. Let me go back here. Just do not abuse it. I've represented several people to the IRS where they have actually abused the amount of money that they're claiming on the Schedule A for charitable contributions. So by IRS rule, you can only give up to 60% of your adjusted gross income. And for 2020, I just want to say this, that there is no limitation because of the COVID virus. The IRS has actually changed the rules as part of one of the, I think it's the CARES Act, where there is no limit on the amount that you can actually contribute from an individual standpoint. There are limits for a company, and I'll go into that next week. All right, so there is no limit. So when you see all these organizations that are donating because of COVID, there's another reason. It's because the IRS has really relaxes his rules when it comes to charitable giving on the tax return. So keep in mind there's a 60% limit on the adjusted gross income for individuals, but still you cannot go overboard. If you're not making a whole lot of money and you put up to 60% on your tax return for a charitable contribution, the IRS is going to look at that with a little bit of scrutiny. So just be careful now. And if you're on the high income side, giving up to 60% of your AGI is not as bad, because as long as you have enough to show that, hey, look, I'm paying taxes on the money that I make to live on, my car I drive, and the lifestyle that I live. I'm paying my fair share of taxes. Then it comes less of a problem. But maybe I'll get into that a little bit later. Next week. So the mileage deduction I gave you is 14 cents a mile. It could add up if you're doing a lot of miles for the church. Non-cash contributions. I see this all the time where people will say that they go to Salvation Army and they're putting $30,000-$40,000 there on Salvation Army donations and so forth. Some people it's legitimate. A lot of other people it's not that legitimate. They're looking for ways to actually reduce their tax liability. So be careful there, because if you do this repeatedly, you might get away with it for 1 or 2 years, but if you do it repeatedly year after year, the IRS is the systems are gonna flag that, and next thing you know, they're gonna ask you for proof of the charitable contributions, and then they're going to open up your return to other items if you got businesses on there or something else on your tax return, and it may become a full-blown audit. So you have to be careful about those type of things. So next week we're going to talk about the reporting responsibilities of religious organizations. What does the organization have to do as far as this reporting? We're going to talk about payroll a bit more, independent contractors. We're going to talk about the qualified charitable distributions, annual filings. We're going to talk about when the church, what cases does the church itself pay taxes, and then we're going to talk about more about pastor and church member salaries. So we're going to talk about some deeper things. We're just going to take a deeper dive next week. I just don't have time this week to actually get into those things, and we're going to talk about other issues that we see all the time that are confronted by the ministry. So next week we'll get into those things. It'll be part 2. If you have any questions, there's the my email address and the phone number to our office. And if you have any other topics especially about the ministry, just give us a call. I'm going to take these 2 weeks and really talk about the ministry because we see it a lot. And I just wanted to actually put something out there on YouTube and some of the other things where we post things so that you can see what the tax ramifications are for ministries. So anyway, next week we'll go into these things. Until then, be safe, and I will see you next week.